How to become a millionaire in America through investing. $1 million. That's the goal. And today I'll show you the investing strategy that has helped millions of Americans build long-term wealth. If you have a 9-to-5 job and think becoming a millionaire is only for the rich, this video might change your perspective. What if I told you that ordinary people become millionaires every year, not by winning the lottery or starting the next big business, but by investing consistently? By the end of this video, you'll know where to invest, what mistakes to avoid, and how to build wealth over time. Let's start with the most important concept in investing: compound growth. When you invest consistently and earn long-term returns, your money starts generating returns, and those returns begin generating returns too. Historically, the S&P 500 has delivered about 10% average annual returns over the long run. While future returns are never guaranteed, history shows that disciplined investors have been rewarded over time. The formula is simple: consistency plus time plus compounding equals wealth. The earlier you start, the more powerful compounding becomes. Here are three of the best wealth-building tools available in the United States. First, S&P 500 index funds. Low-cost index funds like VOO or VTI give you ownership in hundreds of America's largest companies through a single investment. Second, retirement accounts. If your employer offers a 401k match, take full advantage of it. It's one of the easiest ways to boost your retirement savings. You can also invest through a Roth IRA, which offers valuable tax advantages for long-term investors. Third, real estate investment trusts, or REITs. REITs allow you to invest in real estate without buying physical property, making them an easy way to diversify. Now let's talk about the three biggest investing mistakes. Mistake number one: trying to time the market. Nobody can consistently predict market highs and lows. Time in the market beats timing the market. Mistake number two: paying high fees. Even a small annual fee can cost you tens or even hundreds of thousands of dollars over several decades. Choose low-cost funds whenever possible. Mistake number three: investing with emotions. When the market falls, many people panic and sell. Successful investors stay disciplined and keep investing through market ups and downs. Here's your 4-step action plan. Automate your monthly investments. Invest in low-cost index funds. Max out your employer's 401k match if available. Stay invested for the long term and avoid emotional decisions. Building wealth isn't exciting every day, but boring investing has created countless millionaires. Remember, becoming a millionaire isn't about getting lucky. It's about making smart decisions, staying consistent, and giving your investments time to grow. Start today. Your future self will thank you. If you found this video helpful, hit the like button, subscribe to the channel, and let me know in the comments.